Okay, here's a fascinating thought experiment for you. What if one of the biggest economic policies of 2025 just disappeared? We're going to dive into what top economists think would happen if the recent tariff hikes were suddenly reversed. The ripple effects are pretty shocking.
So let's really think about this. That one policy shift sent huge shockwaves all through the global economy. But what if the complete opposite happened, just as fast? Let's explore what could happen if we tried to unwind this massive change.
So, where does this wild idea even come from? Well, this whole scenario is based on an analysis by Oxford Economics. They basically created a hypothetical situation to measure the true impact of these tariffs, and honestly, the results are pretty eye-opening. They're calling it an extreme upside scenario. So, just imagine this for a second. The administration is looking for a big win before the 2026 midterm elections, and they decide to completely reverse those controversial Liberation Day tariffs. All right, so how would this actually play out in the real world? Well, the study maps out three main steps. First, the administration would go on a kind of charm offensive, trying to line up a bunch of new bilateral trade deals. Just agreements between the US and one other country. The whole point here is to generate a ton of good press. And all that positive buzz would then set the stage for the final big move, rolling US tariffs all the way back to where they were before 2025. So if that happened, what's the first major domino to fall? According to these economists, it would trigger an almost immediate and frankly huge boost to the entire global economy. And here is the number you need to see, a potential 0.5 percentage point boost to annual global growth. Now that might not sound like a lot, but to put it in perspective, that's the kind of jump you'd expect from a major tech breakthrough, not just changing one policy. In macroeconomics, that is a massive deal. And you can really see the difference here. On the path we're on now, global growth is projected to be around 2.7% in 2026. But in this reversal scenario, it jumps up to 3.0%. And then check out 2027. The gap gets even bigger, from 2.9% all the way to 3.4%. That difference really shows you just how much the current tariff policy might be holding back the world economy. A global boost is one thing, but what does any of this mean for you, for your wallet? Let's bring this down from the 30,000-foot view to the household level. The connection here is actually crystal clear. The analysis shows that getting rid of these import taxes would give immediate relief to American shoppers. It's pretty simple when you think about it. Tariffs make imported goods more expensive, so getting rid of them should help bring prices back down. It's really a tale of two realities, side by side. On one hand, with tariffs, you have higher inflation, which means your money just doesn't go as far. But in this other scenario, without the tariffs, you get lower inflation and more purchasing power. Plain and simple, your dollar just buys more stuff. And the projection even puts a specific number on that relief. It found that reversing the tariffs could lower the consumer price index, which is the main way we measure inflation, by 0.4 percentage points. And get this, that's every single year through 2029. That's real sustained help for your budget. Okay, this all sounds amazing, right? A global boom, more money in your pocket. But let's pump the brakes for a second. How likely is any of this to actually happen? It's time for a little reality check. The very same economists who ran this analysis are pretty upfront about it. They say that a sudden, complete reversal like the one we've been talking about is, and I'm quoting here, a long shot. So it's really important to remember what this is. This is a what-if scenario. It was designed to show the scale of the economic impact, not to predict the future. As of right now, there's zero indication that a reversal is actually on the table. The real value here is just understanding the economic forces at play. But hang on, that's not the end of the story. While a quick reversal seems unlikely, if you look at the longer history of U.S. tariffs, thanks to some great data from the Yale Budget Lab, it kind of suggests this whole period of high tariffs might just be a temporary blip on the radar. This timeline really puts it all into perspective. For decades, the overall trend for U.S. tariffs has been consistently going down. So while the 2025 shock was this massive spike, you could argue that history might eventually pull policy back towards that lower tariff norm over the long haul. But here's the catch. Even if we do get back on that historical track, it's not going to be a quick fix. The study suggests it would be a very gradual return, probably taking at least a decade to get back to the tariff levels we had before 2025. So all of this really brings us to one big fundamental question, doesn't it? This whole thought experiment, this extreme upside scenario, it forces us to think about the real costs and benefits, not just in some abstract economic model,
but in terms of global growth and the actual money in our own pockets. It really makes you wonder, what is the true price of a trade war?